Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday, April the 18th, 2012. We're going to look at several charts today, and I'm going to show you a couple opportunities that I see on the short side for different markets, as well as some information you may not be aware of. We're going to start off looking at Japan iShares. This is one I haven't mentioned in a couple of days, and we are still short this particular average, and you'll notice that the ticker symbol is EWJ. It's Japan iShares if you wanted to trade the Japan markets. And you'll notice that in this situation here, we've got a major sell-off here, and then we're just moving sideways and in this little range right here. This has been the case for almost 2 weeks now. And that's fine. You're actually at a particular level that has been support in the past. You'll notice that this previous area here, we've seen find support there, and then again here. So this is a key level, but whenever you're in a bullish market, whenever you make an advance and then you pull back and you find a bottom, you immediately ricochet off of that bottom, give it that V-shaped bottom, and you spike higher. And that's been the case every time as long as you're in a uptrend. That continues to be the case. And whenever you have a situation that changes and all of a sudden she stops doing that and she starts to flatline on you, something's changed. All of a sudden the buying activity is no longer as confident in the market, obviously, and that's why you're not getting that knee-jerk reaction back to the upside as a great buying opportunity would typically provide. And this is not doing that. So we're moving sideways here, and you're going to see this on several other charts as well. This is basically a warning sign. And whenever you're looking at this, you know that you are finding support because you're at the support lines you've seen before. But then you want to start to analyze what it does on that level. Whenever you get a situation like we're seeing today, and we're watching it, we start to get these inverted hammers or shooting star formations. Let me clean that up so you can see them. You know that you're starting to see sell pressure. Problem is, typically when you're in an uptrend, you'll get those at the top of the pattern. That tells you, okay, you're finding resistance, you're going to sell off, and you sell off. Okay, and you start to see it again over here, and you sell off. In other situations, you have a rally, and then you start getting what they call hanging man candlestick formations or hammers at the top of the pattern rather than being at the bottom of the pattern like you see back here. That's another sign that you're fixing to peak, and so you roll over here. Now, whenever you get to the bottom here, it's oftentimes you'll see a situation like this where you see what looks like a shooting star formation, but it's at the bottom of the pattern. That calls for a reversal to the upside. It's just it depends on where it's at in the pattern. If it's at the top of the pattern like it was back here, it tells you to look for a sell-off. If it's at the bottom of the pattern, it tells you to look for a jump to the upside. However, when the chart fails to do that and it starts to break down, like it did in this case here, then you jump up here again and you don't go anywhere, and then you start selling off again. Then you get another one here. We get a little jump, but we get another. Basically, in this case now, it's showing as a sell sign. That's what I'm trying to say here. I don't know if I'm doing a very good job or not, but basically, when it first happens, a knee-jerk reaction, once you get those signs, that's a buy signal. But when they start to fail and they don't produce the result you expect, then they're telling you something else. And in fact, this one's telling you, well, at least I believe this one's telling you, this market's actually going to break down and go further. It's going to break through this support here. And that's why, one of the reasons why I'm very bearish in these markets. There's just the signs that I'm getting out there are not showing bullish niche that used to be there before. Back here, we had the 50-day moving average was acting as support. We were well above it. All of a sudden, we closed below it, and we're staying below it. It's a very bearish sign as well. Here we are looking at the NASDAQ, same overall story I've already shown you. You get this rally here, sell off, immediately jumps back to the upside, starts advancing again, sell off, immediately jumps back to the upside, sell off, jump up to the other side. This is the same situation we've seen again and again. Now we stop doing that. Instead of just ricocheting off the lows, we start to move sideways. Again, a major warning sign. Notice here, no hammer candlestick formation. Here, no hammer candlestick formation. These low points are not being confirmed by buy pressure, and that, let me clean this up, is typically seen by finding a hammer candlestick reversal situation where the price is sold off, gets down to a certain level, and then buyers come and buy it back up, and that creates the hammer candlestick formation, and that's typically your bottom. The next candlestick formation, if it's higher high and a higher low than the previous candlestick formation, it's a great buy opportunity. Instead of stop off the low here, makes a lot of sense. In this situation here, we're not seeing that. So again, moving sideways at this level instead of just ricocheting off of the low point there, it's again a great warning sign. Now I'm already short this one. We've not been stopped out yet. That doesn't mean we can't be stopped out. It just means that I'm not buying this bounce or the last one we had a few days back. I see these bounces as fake, and we're eventually going to break down through this support line. So keep an eye on that. I'm going to show you something else that kind of shows you a little bit more insight into what's going on in this market. One of the new alerts that I would have out there would be the Russell 2000 Small Cap Index. We've been stopped out of this one already. I would actually enter it again at this current point, and I will show you why. In this particular situation here, you had this obvious major move to the downside here. We caught that, made a lot of money on there. And you'll notice that she broke this support line right here, like I was just talking about those other support being eventually going to break down on Japan's market as well as the Nasdaq. This one actually already broke through it, closing below the previous support line. So that's a big warning that again confirms what I'm saying, is this support is breaking down. Then you get this knee-jerk reaction back to the upside here, sells off again, and bounces up higher again, and now she's selling off. But if you take these two candlesticks and you do what's called blending, where you don't just analyze one candlestick but you blend them, you can do 2 or 3 or whatever, but if you blend these two candlesticks together, what you're actually seeing is a shooting star formation. It's one of those sell signals I already pointed out for you. Over here you got kind of one as well. You blend this one and this one together, you're getting the same kind of warning sign that you're finding some resistance here. And here you're getting it again. So what basically you're seeing is the uptrend came here and pulled back down. You had a series of higher highs, higher lows, still in an uptrend. Then all of a sudden she advances up here, fails to make a new high. That puts the uptrend in question. Then she breaks to a new low. That changes the uptrend to a downtrend. So now we're watching this guy fall. We're looking for the next opportunity. We'll keep advancing our stop, which we finally got stopped out over here. We keep advancing and stop till we get stopped out, and then we watch for another opportunity to short. And the easiest sign to look for is a shooting star candlestick formation. Whenever you see that, it's an easy get short signal. So whenever you get the jump, you got one here, pulls back, jumps up again, and again, like I said, if you blend these two candlesticks together, you're getting a shooting star candlestick formation. So why are you not seeing this on other charts in the market? And actually you are, but it may not look like it. But let's go look at the Dow Jones Industrial Average, and I'll show you what I'm talking about. Okay, here we are looking at the Dow Jones Industrial Average. Let me get out the tools here. You can see that we had this big move to the upside here, shooting star candlestick formation right there. Shows the buyers drove it up, sellers pushed it back down, and she closed down, meaning that sellers were stronger than buyers there. That's a sell signal. You get a sell-off that follows, and again, it marks major resistance as well. You bounced against that a little bit higher and then sold off again. You also saw the same thing over here, basically the same thing over here as well. And now we run up here, and like I've already shown you in the Russell, you're seeing it if you blend the candlesticks together. Yet right now, with these two candlesticks, you're actually not seeing that. So what's the deal? Why aren't we seeing that? If we're seeing it in the Russell, why aren't we seeing it in the Dow Jones? It's possible that individual markets won't show it while others will, but in most cases, your major markets are all going to peak at relatively the same time period. And so this is something that you should ask yourself, why are we not seeing it here? Well, actually you are, and to see it you have to actually zoom into the intraday activity. You got to remember this candlestick formation right here has got a major gap into it. So let's zoom into the intraday and I'll show you what I'm seeing. Okay, here we are looking at the Dow Jones Industrial Average for the past 5 days. Each one of these candlesticks represents 15 minutes of intraday activity. You can see that we had this gap up to this level. We just shot up in the first thing at the open, and then started to advance all day. Was it yesterday? Closed up about 190 something points, and then we basically flatlined until into the close. And now today's activity, we can see that we just sold off, actually gapped down substantially, and then started this continued just sell off basically. Ultimately, if you take these things together, ignoring the gap, and you say you had an advance and then you had a sell off and a close to the downside, what you actually have is a basic little shooting star formation like you've seen before, where you've got the wick out of the top and then the little candlestick formation like that. Okay, so you've got a little bit of buying activity at some point in the intraday open and close, but then you've also got that wick out of the top that's showing that there's a sell pressure right there. That's what this is. It's showing you sell pressure. You don't have to take my word for it. You can simply look at the volume and see it for yourself. It's substantial selling going on in this market right now. Again, I would not be bullish in this market. Even if you have days to the upside, I wouldn't believe in them because they're not being confirmed. They're not confirmed by volume. They're not confirmed by candlestick formation. They're not confirmed by trend. They're not confirmed by the VIX, by the dollar. I mean, there's really no confirmation out there other than people telling you, buy, buy, buy. Well, it's not going anywhere. The last chart I have to show you today would be the UUP, or the US Dollar Bullish Index Fund. And this one I've entered another long position from, because of the US dollar runs the inverse of the overall markets. Basically, when people sell stock, they in effect buy dollars, and that puts a floor in the price of dollar, and you see it rally. Now, I've been showing you chart after chart after chart for the past week, or 2 weeks actually, maybe even 3, of different markets that are peaking, from the US to Europe markets, so forth and so on. And that came to be true, and they're breaking down, so forth and so on. And I think the U.S. markets are going to do the same. If I'm right, then there's also going to have to be some confirmation on the VIX, which we already showed you yesterday, as well as the U.S. dollar chart here. And you are seeing that. In fact, you're seeing an inverse head and shoulders pattern we talked about in the past. You get this first shoulder, the head formation, down to the second shoulder, and we make this move higher. And we're just pulling back a little bit. We got stopped out of our long position here. We pulled back a little bit. I want to get back into this trade because, as I've mentioned, this is not over. I believe that we're moving sideways before we make a move higher. Now, it doesn't mean that it's going to happen tomorrow, even though I've marked the chart as being, I would start being a buyer here. You can still see the markets fight. I'm not trying to call the exact day here, but I do believe it would be a smart buy to be a buyer at this level here, with a stop set off of this 21.85 low here. So the 21.84 would be my stop at 1 cent below that low point, and then I would be a buyer in this range right here. This makes sense to me. Looking for this to actually test the previous high, and in fact, I expect we're going to break out above this neckline. When you're looking at an inverse head and shoulders pattern, you always want to mark the neckline, and then once you break out above that, close above that point, then you can actually say, okay, we have confirmed that this is in fact an inverse head and shoulders pattern, and you'll be able to measure this distance out right here, do the math there, and add that number to the breakout point. You get an idea for how high she's actually going to go. It's a lot higher, which means the markets are going to go a lot lower, and that's because probably of Spain was going to be the catalyst to do it. Remember, people are arguing back and forth right now. Is Spain going to default, or are they not? They're going to need a bailout. Are they? Will they not? We went through this entire conversation, what was it, a year, 2 years ago already? We've done this whole thing with Greece. We've seen the market jump up to the upside on big numbers because Greece is not going to need a bailout. Then the next day it's back down because Greece may need a bailout. Then it's, okay, we're going to give them a bailout, but just a little one. Then we get another one. Oh, and then another. We've seen this play out before. Only difference is Spain is much bigger, and it has the ability to not only harm Spain, but also those invested in Spain, and that puts Europe right there on the forefront all over again. So the fact that you're seeing these peaking signs, head and shoulders formations on European markets, and even in the US we're starting to see some signs like that. The fact that you're seeing these peaking signs and a major bottom sign in the dollar and the VIX, it's there for a reason. The market's telling you, get out. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. Share our videos online. It helps us a lot. These charts are always kept on our free website at perfectstockalert.com, updated every single day. My notations are on them. Anything that I see it's important, I post there for you guys to check them out, so feel free to do so. God bless. Take care. See you in the next video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.